May profits be upon you. Hey, I got a breakdown for gold. It's not easy. Let me tell you, look at this. Just look at the price action, man. Look at that price action. All right. Range, range, range. And then we get a breakout and we go right back in. And this isn't the kind of market that you can just look at and go, we're going to be trending up and down or down, for the rest of the week. But if you get into the weeds here, you got to get into the weeds in the middle of this crazy looking range. All right. And we can make some sense out of some things. All right. What I want to show you is this. All right. From here at the bottom of the range here, you see how price makes these lows, right? We make the lows, we make this low. All right. And then we're forming a zone of demand. All right. We know it's a good zone because from here, price impulse breaking these highs. Let me start making some annotations. All right. Broke the high here. All right. Took the liquidity from that high, took the liquidity from that high. We broke those highs here. All right. Price retraced, mitigated this order block. Again, broke the high, took the liquidity. All right. We come back to the same order block to mitigate it again. Powerful impulse to the upside, breaking all this structure. All right. Structure to the upside. So what does that mean? Or break of structure. Well, a break of structure to the upside means a return to impulse, right? Is this the impulse? It looks like it. Looks like this is where price originated that the impulse that broke all these structures. Is this it? Or is this it? From here, boom. From here, boom. From here, boom again. Just recognize, you got to be able to recognize where the source of the impulse is. All right, price is jumping off from the same order block mitigation. Hey, take a hint. We never broke these lows. We never broke those lows. Okay, so here we are, coming to more towards where price is most relevant to current times, right? All right, so we finally mitigate this order block once again, all right, down to the 50% level, right? And then we start breaking up to the upside. We're looking for liquidity grabs, right? We took this one out and took all of these, all right? Price retraced, and you can always expect a retracement after a liquidity raid. All right, when you run the highs, expect price to pull back a little bit. Okay, so what did we form here? Another bullish order block. You might say to yourself, well, why didn't you put it here? Excuse me. Why didn't you put the mark your order block there? Everybody marks their order blocks a little bit differently, but the way I see it is this is a sell to buy move by market makers. Okay. The selling starts here. And then this buy move. All right. They're in profit in their buy move, but they're in drawdown from the sells. So they have to come back and mitigate out of those sells. Boom. Mitigate out of those sells. All right. Just to continue to gain profit with their buys. Got it? That's my thoughts. That's the way I think, and I know some other smart money traders who think the same way. Doesn't make it all right. Just makes it my view, right? All right. So here we go. We mitigated here. All right. So who's in control? This is where we get down to the nitty gritty. Who's in control? Demand or supply? I say demand. We have a chain, a demand chain developing. All right. And that's what you want to pay attention to. Oh, I wanted to show you something about this. go one time frame up, two-day time frame. That's a bullish engulfer, right? That looks a little more cleaner to you, huh? See how price comes down and mitigates here? All right, but the selling started here. That's why price is coming down to mitigate into this block. So leave me alone. All right, so we're going back to the daily. Sorry. Going back to the daily, you can see price found demand, mitigated, came back up here. This is an interesting spot. Let's go to the 4-hour. It's an interesting spot. We have supply here, right? Break this high, or broke this high. Sorry. We broke this high. All right. We're looking for a return to impulse. Where's the impulse? I'd say this would be the first place I look. All right. This would be the first place I look. And that's where price came to. Boom. Right? Pop. Here's the deal. What happened here? We didn't make a new high, right? What does that mean? This is a week low, a week high. This is a week high. That's not a week high. That's not a week high yet. This is a week low because it didn't make a new high. That means this is going to be ran for liquidity. And that's exactly what happens. We break structure to the downside, right? We got to clock these things. All right. But we're also returning to impulse. This is where price found a launch pad, right? This is where price finds a launch pad, right? We know that this area is pretty strong because price is jumping off from there, okay? All right, and this one came and took the liquidity from that low at this mitigation point. So I would have been on the lookout for price to go higher. And if you go down to the 1 hour, 15 minutes, you'll see that we had a change of character where price turned from bearish to bullish momentum here. You got to be able to see those things. You got to be able to catch those. That's where you want to catch your best trades. All right. You get your change of character here. The low was beat. All right. The high beat. But this was too late. This isn't the change of character I'd be looking for. Honestly, this is the change of character would be down in here. All right, after this low was made, and then a break of one of those highs after the high is beat over here. It's going to be a real subtle thing right here. All right, once you beat that, you're looking for price to come down and retest that bearish engulfer there. And that's what it did. That, and then came off. All right. So where is the change of character? I mean, after this low is taken out, this high is taken out, I would be looking for price to return to this order block here. Okay. That's my eye anyway. Here we go. We're up at the top. Supply is holding, supply is holding, supply fails, right? No, supplies didn't fail, supply held, all right? And what happens? What happens here? Price comes right back down to another bullish order block. Right here. The chain of demand is persistent. It's consistent. 1, 2, we come right back down to demand. Price takes off, taking out all this liquidity, taking out those highs, taking out the bearish, the bearish order block here, the demand, I mean the supply zone, took it out. All right, violated it. Boom, right? So who's in control? It's demand. Buyers are in control. All right, here we go. Up here, we're on our way to a higher order block, a higher time frame bearish, supply. So we got a ways to travel, but the fact of the matter is we're breaking structure to the upside. All right, we're going to get a pullback here, and I'm thinking maybe price will visit this sell to buy move here. All right, we might find a demand zone here on a lower time frame. All right, maybe if price comes down here and then continues higher. All right, would that make sense to you? It would to me, because demand is in control and we're at the 382, but prices coming down and heading towards the discount area. Now, I like to put my Fibonacci at the beginning of the momentum where volume steps in. And here we're at the 50%. This sell to buy move here is right at 618 at the golden ratio. I would be looking here for a long. All right. I keep my eye out for long positions in this area for a change or shift from bearish momentum to bullish momentum. If it happens sooner, I'll look for a change of character on the lower time frames, and then I'll take what I need. I'll look on 15, 5, and 1 for an intraday trade while price is in this area. Once it gets in this area, I'm back to my 4, 15, and 1. 4 hour, 15 minute, and 1 for my entries. 1 is always for my entries. All right. So we'll see. We will see next week. All right. I hope you found this video educational and nutritious for your mind. All right. To feed your mind. Okay. And if you have a market that you wanted me to look at, you got a question about it. All right. Hit me up. Hit me in the comments. Don't forget to smash the like button, man. That helps the YouTube algorithm and it helps me to grow my channel. And that's all I ask. I will see you in the next video.